Okay, so short forms are the 1040A and the 1040EZ. Called easy because it's supposed to be easy, the easy form. Okay. And the long form is the 1040. Okay. Your dependents are your children, spouse, okay, so your children, your spouse, your elderly parents can be your dependents. Anyone that you have a legal guardianship to, but not your roommate, not your dog. Even though your dog does depend on you, your dog is not a legal dependent.
Did you claim your spouse if they like don't have your dog themselves?
Yes. Yeah, you can claim your spouse. Your spouse, even if you both work, you're each other's dependents kind of thing. Your spouse is always a dependent. They always count. And then what happens is if you file together on your taxes, one of you gets listed as person number one, person number two is the dependent. So it really doesn't matter. It just works out that way. Exemptions are, it's kind of like a tax deduction per dependent. And these are a set amount, which can change from year to year, but it's like they just tell you how many people, like how many, or how much that is. So it'll be, you know, $3,500 per dependent, or something like that. There are set requirements to use the form 1040EZ. That's, like I said, it's the easiest form to fill out. It requires the least amount of thought or work, but you have to fit the requirements in order to be able to use it. So I'm going to write those down really quickly. Be single or married filing jointly. Okay, so married filing separately or head of household, you can't file with the 1040EZ. No dependents. There's you and spouse only. So you can't have kids, you can't have, you know, grandma or mom living at your house that you claim. And again, you still can't claim your dog. Income less than $100,000 at the time that this book was published. So this may, I want to put ish. There's an income limit. It was $100,000. It may have changed. I have not looked at the most recent numbers. So, but it won't be ridiculously different than $100,000. It'll be right around $100,000. But most people, if you're making $100,000, are going to have deductions and exemptions and things that you want to claim, so you're not going to want to do the 1040EZ. Income can only be from wages, salary, tips, no self-employment. So in other words, you can't have a 1099. You have to only have W-2s. And your taxable interest, $1,500. So if you earned interest on a bank account or stock market or anything like that, it has to be a maximum of $1,500. We've got Elizabeth Allison, and she's a food editor. And she has a 1099 and W-2. Okay, those are on your paper. So let's just pull those up really quickly again. 1099, W-2. Oh, wait. Yeah, so here's our W-2 at the top, and this is the 1099 at the bottom. This is for her interest income. So it's right there, interest income. Okay, so for her, because she's single, and because her interest is less than $1,500, she can use the 1040 easy. So that's what form we're going to use. No, you can't be, sorry, when I said 1099, you can't be self-employed. So you can receive a 1099 from a bank for interest, but you can't receive a 1099 for employment. A 1099 is a form for any income that you've earned that you weren't taxed on. So that concludes bank interest. So if you make...
So like if you're like, like my boyfriend's brother makes a lot of money like making balloons and things. Like not all, that's not all he does. Like I don't know, just entertains kids.
But he's self-employed. So if he is hired by a company to do those things, he'll receive a 1099. But if he just gets hired by random people, he has to keep track of that and pay his own. Yeah. So it depends. If he's being hired by companies, they'll 1099 him. If he's being hired by parents at like a house, they're not going to give him a 1099. He has to report that income on his own. Okay, so we're going to fill this out. The name and address, you guys can do that, and the social security number. She'll have her social security number, and that'll get filled out right there. Okay, so wages and salary and tips, that's in box 1. So if you look at the W-2 that you have, box 1 is highlighted in black. There's 2 right under the word e-file on that screen that we just had up. And her wages were $83,600. So that goes right here. Okay. Her taxable interest is on the next form down. That's $956. So that goes right there. Okay, she had no unemployment compensation. So her adjusted gross income gets these 2 added together. So, or these 3. Add all those. $84556. Okay. I'm sitting here recording and I don't have this up. Okay, so that's her income. If someone can claim you or your spouse, check the applicable boxes and enter the amount. Okay, if no one can claim you, enter $97.50 if single. Okay, she's single, so she's entering $97.50, and then you'd enter $19,500 if you were married filing jointly.
Like if you and your husband live.
No, this is like if you are 17 and you have a job, but your parents still claim you.
Oh.
So if that's the case, you would click here, or if you are 17 and you were married, but your parents still claim your spouse. Up till you're 24, yeah.
So like if I got married, my parents would claim me.
Yeah, they shouldn't, but they could legally. If you live with them, let's say you live, like you guys live with their parents or something, then the parents can still claim you. But if you're married and you're living on your own, they really should not do that.
And even if you're over 18 until you're 24 and you live with your parents,
They can still claim you. You might have to put this on here, yeah. Yeah. Yes, on your 1040 easy. So this is the income from the W-2s. This is any income from bank accounts. Then you have any unemployment compensation. If you are paid unemployment because you got unemployed and you qualified for that, you do owe taxes on it. So that goes here. Add all those up. This is your.
Negative method?
Hmm?
Like, the negative method?
No, it would still be positive because you'd be paid unemployment. So if you lost money or you lost your job and then you get an unemployment check from the state, you have to claim it. This no, line 5 is the standard deduction. This is for people that are not claiming individual deductions, like medical bills or casualty losses or things like that. This is just your standard one. So you subtract this deduction. So subtract line 5 from line 4. So you do 84556 minus 9750. So that's 4. Sorry, 74806. Okay. This is taxable income. Okay, so we subtracted here. Your federal tax withheld comes back from your W-2. So we have to go back to the W-2 for that. And if you look on your paper, it's in box 4. No, sorry. Box 2. So if you look across, where we had the, if you go straight across, it's the 15,884. So 15,884 is our federal income tax withheld, so that goes right here on that line. Earned income credit, that you have to have a child for or something, but if we look on the back, it might have some box 5 and 7. No, okay. Earned income credit, we're not going to worry about. Non-taxable combat pay, you guys don't have that. So your total payments are here. We're going to add, oops, sorry. Sorry. I saw this ad, I added those. This should have been a 0 here, and this should be added. I missed that 0. So that's how much I've paid in. And then I have to go to the tax table. Tax tables. Tax table. And my income is 74,806. So I need to find that on the tax table. 74,806. This is my line 6. So I'm right here. And I'm single, so my tax is 14,736. You see that? If line 9 is bigger than line 10, okay, so this is what I owe. This is what I paid. If you paid more than you owe,
well, obviously,
you get money back. If you owe more than you paid, you still owe more money.
So you don't get like a tax return?
If you owe more, yeah, if you owe more than you paid, you have to actually pay them more. If it's exactly even, you're just even. And then if you paid more than you owe, you get money back. So you subtract these two numbers. And in this case, the paid was bigger than the owed, right? So this is going to be a refund. Refund goes on line 11A. Okay. If you owe money, it would go on line 12. And this money, or this amount right here, is info that you fill out for deposit. Or they can mail you a check. If you want direct deposit, you fill that out. And then if somebody else, you want somebody else, like you, a tax return professional or something, that gets all filled out. You both have to sign here, you and your spouse, or just you, and then if you had a paid preparer, they have to fill that out.
So, like, you use your TurboTax if you don't know these numbers and so would have to figure out those numbers?
No,
This is pretty easy. right?
no. Here's what you would do. If you're in this zone, the 1040 EZ zone, I would not pay TurboTax any money to file my taxes because this is very easy. It's when you're in the 1040A, 1040, and you've got more deductions, then that's when I would worry about using something like TurboTax if you don't know what you're doing.